Good afternoon, folks. I think that's a better view. Good afternoon, one and all. Hopefully we are well. Perhaps we can just give me a sound check. Make sure that we're coming through okay, nice and clear. Simon Strutt is in the house. He says, good afternoon. Good afternoon to you. So that means it's all coming through loud and clear. No echoes, hopefully. Gosh, it's been a while since I've been back on doing this. I know we were on last week, but it's been a while since I've been doing the regular event. I've got to work out how to use all the technology. And you know what I'm like with technology. Good afternoon, Adnan. Good afternoon to you as well. Good afternoon, Tom Quimby. Tom Quimby, is this AI generated music? No, not really. It's basically given to me by the streaming software which I use. I use Restream. I did say to my member of my team here a moment ago, can we do something about this music? And, she suggested we use some Led Zeppelin, but I think we get done for copyright on that, don't we? So the YouTube algos pick that up pretty quickly and then take it all down. So we're stuck with the hip hop. I guess it's a good vibe, isn't it, to get going with. So there you are. That's it. Tom, you mentioned a second ago, you said a second ago, is this the best time to live stream? Well, look, it's only this time of the year where the clocks move forward in the US 3 weeks before they move forward in the UK, and of course, and Europe and so forth. So there's a bit of an overlap. I could change it an hour earlier, but then of course it goes out of sync. I'll have to change it back again. So we have to put up with this in the autumn and then put up with it now. So anyway, but also the streams that I talk about, are not really that sensitive. I'm not here on a 1 minute screen, trading the markets. It's not something that's that time sensitive. So if you are trading the open, and you're doing your pre-market sort of prepping, as it were, you can still do that. Maybe have me in the background. So there you have it. Now, as I always say, those of you that have been following me over the years on these streams, you know how it works. Basically, get involved. It is an interactive session over 45 minutes or so. Giving you a chance to ask me any questions trading related, anything at all, anything you want me to look at in terms of chart price action. We can do that when we get onto the charts as well. So do get involved, and we'll see if we can help. I intend these sessions to be basically really sort of 3 sessions. First of all, we talk the 3 parts of it. Basically, we look at the fundamentals. What are the driving factors behind the markets? Why the markets are moving in the way they are. We always get in psychology into this because I want to get people basically thinking like a trader, thinking with a trader mindset. And then, of course, we will look at the actual charts, look at for technical sort of areas of interest as well. So there's 3 areas of the stream that we'll be sort of exploring each and every week ahead stream. And of course, when we do our ad hoc sessions as well, which we'll do over the main news events as they come out. So we'll also be doing that. So as I say, do get involved, and it makes it much more interactive. Lucas Els, good to see you again after all this time. Hopefully you got you did get my email. That's good. So hopefully that works. Where's Naked Strategy? Still using it? I am still using it. Adnan, it's one of my Adnan here, for those that don't know, just asked me whether I still use the Naked Strategy. I've actually really done some videos on that, which will be out in the upcoming masterclass as well. But yeah, I mean, I've been using that since 2005. For those that don't know what I'm talking about, it's basically a day trading strategy looking for big reversals in the markets. It's not something that you will trade on the 5-minute chart or the 15-minute chart. This is a longer term strategy, ideally suited for those that have day jobs and other active and other sort of busy, hectic lifestyles. But yeah, it's a powerful setup. I mean, the naked strategy, remember, and you know, if you've been following me over the years, I've been talking about this strategy since about 2015 when I first came onto the education space. And now with all these sort of emergence of smart money concepts and ICT and all that, I was looking at that recently. It's basically liquidity grabs, that ICT would call it, or SMC would call it. It's basically the same. And I've been using this literally since I came onto the screens. Well, I've been talking about it since I came onto the screens. I've been using it since 2006 when I came onto the screens straight after the trading pits. So yeah, but now it's sort of taken on a different sort of format with the ICT SMC traders. But it's basically that, looking for these areas of liquidity that are respected by by those big sort of big players that basically once they get tested, the market moves in the other direction. But again, I'm not going to delve deep into that in this week ahead session. But yes, it's still a very valid strategy. And also, and you'll hear about it coming up in time where we're going to be doing webinars on this. Here at Funded Trading Plus, we've got access to a lot of data that basically, tells us what the winning traders are doing and what the losing traders are doing. And in fact, just giving you a bit of a clue, one of the data points that have come out from our analysis is the longer term timeframes tend to work better. So the naked strategy, longer term time frame daily chart can be something that is worth exploring. Not at the moment, Simon, on the weekly PDFs at the moment. Something that we may do in time, but again, that's up to the team. We're just evolving the education department here at the moment. So we'll see. If you enjoyed that and you like it, Simon, then let me know. Well, you've let me know. And then maybe see if we can factor it in. Good afternoon, Mastano Simbobi. Good afternoon. Thank you for tuning in. Okay, and Queen Cartel. Hello, everyone. Excuse me. Good afternoon to Queen Cartel. And I can't read that. What does it say? Good evening. Why is there no translation? We don't understand English. Is that UAE flag? I'm not sure. I don't speak Arabic, unfortunately. Speak a bit of Filipino, but I can talk a little bit about Tagalog, but can't really talk Arabic at the moment. I don't know if YouTube has a translator on it that you can do as well, but we don't have that at the moment. But Leon Chan, hello to you. Good to see you in the house as well. Right, without further ado, because I've just killed 10 minutes there, but that's good. Let's get into it. So the point of these streams is basically to give you a bit of an insight into what's going on, why the markets are moving in the way they are moving. Even if you're not trading the fundamental analysis, that's basically what drives the market, the macro view. Even if you're not trading that, I do think it's really important that you have an understanding. After all, you are a trader or you're aspiring to be a trader. We trade the markets. It's important to know why markets are moving. I think it doesn't mean you have to trade the fundamentals, but having an understanding of what's driving what we're doing, I think is really important. As always, quick disclaimer, this is only meant for educational purposes. I'm not here to give you financial advice. That's not what we do, not what I do. If in any doubt, you speak to your financial advisor. Same old stuff. I've got to put that in. I'm sorry, it's boring, but there you go. Got to do it. Okay, so what's been happening last week? Obviously, I've been off the cameras for the last 4 months or so. And these week ahead streams used to be pretty defined in what we can expect. I think this time now, with the way that Trump is affecting the markets, the week ahead stream sometimes can be trumped by what is happening on the political side of things. This data is still really important. I think we've got an important week out, but maybe not as important because it could all change like that with a statement out of the White House or a change in a stance or what have you. But again, it is really important. So what happened last week? Basically, global tensions again continued to weigh on the markets. We're looking at tariffs now. He's been on the wires over the weekend talking about April the 2nd being the sort of the crunch day, if you like, when he's going to get back all the money that's owed to America with the tariffs and so forth. Markets are still very jittery about this. Okay, stocks actually were down about, that's 3.5%. I did the slide, which was Friday evening. Stocks actually ended the week about 3% down on the week. So stocks were down about 3% on the week. We also had a consumer price data come in. Remember, consumer price index is inflation. That's not the main measure of inflation that the US Fed look at, but nonetheless, it's still an important data point. It's basically how much prices went up year on year. And it came in slightly less than expected, down there at 2.8% from 2.9%. So basically what we're saying here at the moment is inflation is edging lower. You know, the Fed, the FOMC, they have a mandate. Well, actually, they have two mandates. They've got to get inflation in and around 2%, and they've also have to have maximum employment. And one of the ways that they control inflation is by using interest rates. There is a decision out this week. I'll talk about that in a second. But they control interest rates. If they need to get, if inflation is coming down, they need to cut interest rates. Cut interest rates, basically, well, I beg your pardon. If inflation is going up, they need to cut interest rates. Let me start that again. If inflation is going higher, that basically means everyone is spending money, means they need to put up interest rates. If inflation is coming down, they cut interest rates. And of course, where interest rates go, the currency should follow. That's why we look at all these data points throughout the calendar month to give us a clue on what's happening to interest rates. Interest rates down means the dollar goes down. Okay, and of course, opposite applies as well. But unfortunately, the markets have changed slightly over the last 2 months, because at the moment we are seeing across the data, we also had consumer confidence out on Friday as well. Confidence in the economy, stock markets are lower. It's risk off ordinarily, and inflation is coming down on paper. But these tariffs that you're seeing at the moment, potential tariffs, is inflationary. So the Fed is in a bit of a quandary. Do they start cutting interest rates, or do they follow the actual headline inflation number that you're seeing at the moment, which is heading down? But of course, these tariffs are inflationary, but that's going to be maybe further down the line. One of the reasons why the Fed might hold its powder dry this week. Producer prices also came in a lot lower than expected. This is the price of goods and services that the producer has to pay at the factory gate, if you like, before they start their manufacturing. And of course, if those prices are coming down or those prices are going up, they need to obviously factor those into what they put out to the customer. So if the prices of their raw materials is coming down, that is deflationary. Means interest rates are more likely to come down, means the dollar is more likely to come down. Okay, more about that when we talk about this week ahead. Also, last week we had the Bank of Canada. They cut their overnight interest rates. They're basically their benchmark rate down to 2.75. And the Canadian dollar, affectionately known as the loonie. Why is it known as the loonie? Anyone want to share me their thoughts on why it's known as the loonie? Let me know what you think. Why is it called the loonie? So the Canadian dollar, the loonie, is also coming under pressure. Tariffs are affecting the loonie. Energy prices. Remember, oil is the biggest export of the of Canada. Oil prices were actually down, have been basically sold off this month. They're down 8% for the calendar month. So this is all affecting the Canadian dollar. The Canadian dollar is a currency under pressure. I'll show you the momentum meter in a moment, how that looks out. We also had wage negotiation out of the Japanese economy. Wage negotiations, they disappointed. Wage negotiations did rise. I think it's just over 5%, They do this every quarter, ordinarily you'd think, well, that's good because obviously Japan want to get their inflation up, and they want to get their prices up, and they want to start putting up interest rates, as opposed to the rest of the developed world that are cutting interest rates. Well, supposedly cutting interest rates. But the wage negotiations came around, I think it was 5.something%, but markets are actually expecting something higher than that, over 6%. So they're disappointed. So the yen actually ended the week as a softer currency. Sophia Kendall says, because of the loonie, there's a loon on the dollar coin. I have to have a spoiler alert here. Sophia is Canadian. If she didn't know, then of course we are all in trouble, because she's got a pocket full of loonies, I would have thought. So yeah, well done, Sophia, because it's got a loon on the coin. Tom says, okay, yes, thanks, Tom. You can sort that out there in terms of the translation. Right, okay, so that's basically last week. Stock markets are under pressure because of what's going on in the economy. Stock markets are again lower this morning, although the actual stock markets in the Eurozone, you'll see here on this chart, were actually a little bit higher. Okay, so the stocks in the S&P 500 actually down 2% on the week. Nasdaq was down 2.6%. Big moves on the month. For those of you that are holding funds, in your pensions, in your IRA 401 accounts or what have you, then you know all about that. But hey, he got the majority vote in the US, so what do you expect? But stocks are down, only now marginally up from where they were this time last year. This was up, I think this was up about 25-30%, these two a few weeks ago, but the stocks have been really hit. I think they're down about 30% really since Trump took over. The China stocks are still showing some gains last week. The European stocks, you can see here the DAX, that's the DAX 30, that's the German stock market. That was showed a 2.5% gain, and 1% on the month. It's up 28%. Oops, is that right? Yeah, 28% for the year on year. Remember, this data I put here, it's year on year, so it's not since the beginning of January. It's basically March from this time last year on year, up about 28%. FTSE was slightly up, but again, it's only up. It's unchanged now on the month, which I guess is a bit of a let out, having seen a big decline in that more recently. But now the FTSE is unchanged on the month. 10-year bond yields. We always look at the 10-year bond yield. That basically gives us a clue. Remember, there's two main asset classes about the currency, apart from the currencies. You've got two main asset classes. You've got stocks and you've got bonds. Stocks are considered risk on. So if you think the economy is looking good and you're optimistic about the future, you buy stocks, you buy companies, basically. If you are more defensive and you want to sort of be a bit more cautious, you buy the bond markets. And of course, if the bond markets are if the bond price is going down in value, that basically means it's been sold, then the yields go up. They work in opposite directions. So yields have been dropped, have risen in the last week, but actually down almost 4% now on the month. Now, if you joined us in the stream last week, Simon and I were on, and I made a couple of references to this. I mean, a couple of references to gold, what's happening in gold. I said to you at the time, if you are a trend follower, you need to pick the strongest trend at the time and think of it on the longer time frame horizon. And we highlighted gold on a couple of occasions last week. It was one of the commodities, one of the entities, asset classes that I was saying where my potential view is. And I also said to you, what my view is doesn't actually mean very much. You shouldn't be trading on the back of my view, but it was something that was moving up in a particular direction. And the point of a trader, certainly at the beginning of the week, they should be picking their trading battles. You don't want to be trading 28 different currency pairs. That's if you're just trading the majors and minors. You can trade the exotics as well. You don't want to be trading all the different currency pairs. You don't want to be trading every asset class under the sun. You want to pick a select few and have them in your playbook. Now, you can change this a month in, month out. But basically sticking to something and picking to maybe a small selection of asset classes and picking the best one. Gold, as of the last 3 or 4 weeks, has been one of the best asset classes to be trading. Had you only been buying gold last week, you would have made money. In fact, if you'd have just bought gold and held it, you'd have been up 3%. You'd have been well on your way to passing prop assessments just by buying gold and holding it. Buying gold on the higher time frame charts, you've got to have a decent stop, of course, but picking the markets, picking your trading battles. That is what trading is all about. It's about having an edge and sticking to that edge and letting time play out for you. Oil at the moment, oil is actually up 2% last week, although it's still down 8%. Of course, global pressures playing on oil at the moment, but gold does seem to be finding a bit of a base. With all this going on, you've got the US dollar. US dollar has been pretty much unchanged last week. We use the DXY. DXY is basically the basket of currencies, of which the euro, I think, makes up 58%, I think it is, of the euro, of the DAX is made up of the euro. And then, of course, you've got the other currencies in there as well. You've actually got, these numbers are maybe last year's numbers, but it hasn't changed much over the last decade, really. But basically, the DXY is made up of 58% the euro, 14% the Japanese yen, and 11% the pound, and all the rest is sort of like pond life below. No offense, Sophia, they're in Canada or here. But all the other currencies are really pretty insignificant of the DXY index. Of course, euro dollar, as I've just said, 58%. Euro dollar pretty much unchanged as well, where a month on the week. Although the euro has been up slightly over the last month. And Bitcoin had another shocker of I say shocker, 12% down, and that's just like a day thing, isn't it? 12% down on the week in Bitcoin, unchanged on the month. Now only up 23% year on year. But I was doing these numbers. If you actually take a day earlier, it's up about 40%. So it changes pretty rapidly. Obviously, Bitcoin, a bit like Tesla stock now, I think. So there you are. So that's basically the market movers last week. As I said, the point of these week ahead streams is to think about your trading battles, try and get an overall view, and then drill down to the particular asset class, and then maybe be trading that. I'm a big believer of not being, not having the whole all the asset classes in your playbook. Just narrowing it down to a small minority. Become a master of a few rather than playing them all. Right. Okay. So let's have a quick look here. Let's have a look here just before I get on to the week ahead. Simon's just says, when you really believe that trading is simple probability game, concepts like right or wrong or win or lose no longer have significance. Very, very true. Simon is a long time follower of mine, and I think we should swap jobs, Simon. I would love to be an extra actor, as you are, on the big screen. Are you in Paddington, by the way? I thought you were in Paddington Bear. Is that right? Simon's a part-time actor. I'm a trader and educator. Maybe we should swap roles. And you can do this because you come up with some really good one-liners there. So thank you for that, Simon. It really is important that you share these things. It's great. I mean, this is what this is all about. I agree. Right. Okay. So let's have a quick look then at the week ahead, what we can expect. So happy St. Patrick's Day to everyone here. St. Patrick's Day, 17th of March. Tonight, if I can find someone to go with, I'll go and try and raise a glass of Guinness to my late mother, who is as Irish could be. I've just seen this come up as well. Let's just put that up. I didn't notice we had this, but the team have just put this up as well. Irish is the code today. 20% off a 50k experience program. Go and check that out. It's only for 3 days. It's 20% off. Gosh, there you go. For St. Patrick's Day. So have a little go at that. I'll show you this at the end. It's also in the chat as well. You'll see it appear in the chat, so you can use that code. Right. Okay. So what's happened today? Today we had retail sales out. Retail sales came out. The markets were going for up 0.4%. Again, I did this on on Saturday morning, that's actually changed today to up 0.6%. So the markets are getting a little bit more hopeful about this. This is the core, by the way, the core retail sales. That takes out the volatile aspects like auto and takes out, the food, energy costs and so forth. It actually came in up 0.3%. And it shows you that retail sales now, this Trump administration is showing signs of weakness. People are spending less. They're not buying as much on the high street. The sales figures are lower. If sales figures are lower, it basically means that the Fed should think about cutting interest rates to get those sales going. Again, will they be cutting interest rates this week? Well, we don't know because, of course, they've got that headwind of the tariffs coming down the line. But retail sales comes in lower than expected. If you're watching that just under an hour ago, you'll see that the S&P 500 did have a little bit of a reaction lower initially on the back of those numbers. Remember, even if you're not trading these numbers, you should be aware of them when they are coming out, because clearly, it's what's driving the markets, and especially if you're on the lower time frame charts. Spreads tend to widen over these news announcements. You can get slipped if you're trading CFDs. Not if you're trading futures, of course, but if you're trading CFDs, you're likely to see an increase in the spread and so forth. And if you're trading the lower time frame charts, you don't want to get knocked out just because of the spread. That will be very, very unfortunate. It does happen. It happens to all of us. My worst, I think, single day loss actually was on the pound against the New Zealand dollar. I get goose pimples every time I think about the pound New Zealand dollar. I think I lost an entire month's money on an announcement in the middle of the night. New Zealand got stopped out. I can't remember what broker I was using at the time because of the spreads widen. Be aware of the news announcements. Retail sales is a big one. Okay, Tuesday the 18th, we've got CPI coming out. Oh, in Canada, yes. I thought the US. I thought that's the US for a minute. That came out last week, CPI. No, we've got Canadian CPI out on Tuesday. That is coming, expected to come in at up 0.1% from up 0.1% last month. So that's pretty much unchanged across the board. So we're not expecting big news coming out of Canada, but beware, we have had a Canadian interest rate cut last week. Oil prices are down 8% on the month. The loonie is still under pressure. If this number comes in lower than expected, if it comes in negatively than expected, you can expect to see further pressure on the loonie, on the Canadian dollar. So low CPI means low Canadian dollar on paper. Doesn't always work that way, but if you can sort of get a picture of the economies, that's exactly what we're doing when we're trading the currency markets. We're trading the strength of one currency against that of another. So keep an eye on the Canadian CPI. It comes out tomorrow at 12:30. Again, our clocks in the UK change at the end of the month. Then it's all going to be then this will be at 1:30. But it's at 12:30 at the moment. Okay, so Wednesday is the big day. Wednesday is the big day out there. We are going to kick the day off early morning. It must be, it's Tuesday night if you're in the US. Bank of Japan policy, there's no exact time for this, but this is their interest rate decision. So they are expected to leave interest rates unchanged. That sign there should be a negative sign, less than sign. So just ignore that for now. But yeah, we're expecting to see unchanged in Japanese interest rates, excuse me. Okay, remember, rest of the developed world are looking at interest rates coming down, having had that sort of explosive growth in inflation over the last few months, COVID and wars and so forth. So all interest rates were going up around the developed world. Now they're all coming down around the developed world. UK's cut, Europe's cut, US have cut. They're all cutting at the moment. But Bank of Japan is the other way around. Bank of Japan are trying to get their inflation up. They're trying to. There's been no inflation in Japan for over 10 years. So it basically means the economies are not expanding. People are not, confident about the future and buying. They're just, you need an economy that's basically got some inflation in there. Inflation is not necessarily a bad thing. You need inflation. It's a sign of a healthy economy in and around 2%. But the Japanese economy struggle to get any real increase in prices. Wage growth, again, it's now popping up. So we'll see what the Bank of Japan say. But more importantly, it's the press conference that follows. Certainly they'll take into consideration the recent round of wage negotiations, but we'll see how they interpret it. My gut feeling, and it's only a gut feeling, is that they will maybe ignore or paste over the not so buoyant wage growth numbers and maybe start talking it up a little bit. I know the central bank wants to get interest rates up. They really want to move these rates higher. So we'll see. If they are more optimistic than the market is giving them at the moment, because the Japanese yen, as you know, had a bit of a bad week because of that wage growth. If the Bank of Japan press conference shows a bit more confidence, you may see the yen find some support this week. Okay, so selling yen crosses, that's basically selling anything against the Japanese yen, could be worth keeping an eye on your radars. So when you sell a currency pair, you're selling the first currency and you're buying the second currency. So if you're selling euro, you're selling the euro, you're buying the yen, you're selling the dollar, you're buying the yen. So selling any yen crosses could be the way to go this week. Again, you don't trade on the back of that, but you look at your price action on the charts. You look for the trends. If you're trend following, you wait for the pullbacks, and then you enter in on that particular trend, picking your trading battles. Okay, so the big event of the week on Wednesday night, UK time, is going to be the FOMC, stands for the Federal Open Market Committee. They are expected to leave interest rates unchanged. Okay, the statement and the press conference follows soon after the actual announcement. It is quite an important meeting. They could possibly, Trump was really, really upset when they left interest rates unchanged last time. So he's piling the pressure on. Obviously, they want interest rates lower. Trump wants the interest rates lower. Trump wants to cut taxes and what have you. And obviously, they want interest rates to come down. But the Fed, they're not political. So the Fed will be looking at the impact of the impending tariffs on inflationary prices. Okay, so although you're seeing weak economic growth in the US, although you're seeing prices coming down on the CPI and so forth, and consumer sentiment last Friday came in lower, although you're seeing this weakness in the US economy, the Fed are more likely to hang where they are at the moment and leave interest rates where they are. Should they shock the market and cut interest rates further, again, then you can see the US dollar coming under pressure. So the US dollar is going to be watching that tomorrow night, 6 p.m. That is going to be 2 p.m. in the US. It's 4 hours difference at the moment. It's normally 5 hours different. But we'll see how that plays out. Okay, so yeah, at the moment, the dollar is pretty much unchanged, having had that big sell-off recently. And then you've got the New Zealand 945 GDP. That is the gross domestic product. That basically tells you how strong or weak a particular country is. It's basically, I guess, the country's bank balance, the gross domestic product, what the actual country is worth. They're expected to show that the New Zealand economy is showing some uptick in their GDP. And on beg your pardon, and on Thursday, I always get confused, don't you, between the Australian and the New Zealand flag. This is the New Zealand flag, yeah, and that's the Australian. I always get confused. This is the Australian number, 12:30 a.m. So that's Wednesday night, if you like, UK time. You've got the unemployment change in Australia. And I always say this: if you're really bad at your job, if you're struggling, why don't you apply to be an economist for Australian data? Because these guys get this so wrong all the time. It's like throwing darts at a dartboard. 28.8. I don't know where they get that number from, but it can be vastly different than that. I've seen this being sort of like 200, 300, 400% wrong at times. Anyway, unemployment rate is more sort of in tune. They're expecting the unemployment rate to slightly tick lower down to 4%. Remember, low unemployment, that means people have jobs. If people have jobs, it means people spend money. If people spend money, it means prices go up. If prices go up, it means the central bank should is inclined to raise interest rates, and where interest rates go, the currency should follow. So if unemployment is edging up, if unemployment goes up to 4.1 or 4.5 or 5%, that basically means that the central bank needs to cut interest rates to spur on growth, to get job creation going. And it basically means the currency trades lower because they're cutting interest rates. So that's basically how you would read that. Yeah, we'll look at the US 30 in a moment. And then on Thursday, we've got the all-important MPC, stands for the Monetary Policy Committee. That's the official bank rate. Okay, so that is interest rates, base rate, as we used to call it, 4.5% from 4.5% to be left unchanged. So that's pretty much accepted. There's 9 panel members. I think 7 are expected to vote for no change. 2 are expected to vote for a cut, but it's pretty much likely that they will leave their interest rates unchanged. But more importantly, as with all these central bank speakers at the moment, it really is central bank decisions. It really is the speech that comes after. Okay, so gives us what we call the forward guidance. It basically gives us clues as to what they're thinking, or why they did what they did, and what the discussions were about. So it really is the press conference that follows. And on Friday, we've got it's another one for Canada. It's the core retail sales. Yep, expected to show a dip as inflation showing a dip, retail sales showing a dip as well. Of course, if people aren't spending money, central banks are more inclined to cut interest rates. To cut interest rates, down goes the currency. So that is expected to show a drop from 2.7%. So you can get the picture at the moment. Canadian dollar is under a little bit of pressure. So that's basically the news events for the week. As I say, even if you're not trading the news events, it really is important that you keep an eye out for what is happening. Even if you're not trading, you don't want to get stopped out of these news events, and it can give you sort of clues on where you should be looking. I'm a firm believer. If the macro view, that's the fundamental view, aligns with your technical view, it makes for a much better, higher probability trade setup. So combining the two. I think it's very difficult trading the markets just looking at the fundamentals. Personally, I've never been able to do that. It's using this in conjunction with the charts, I think, is the way to go. Right. Okay. So let's have a quick look then at my momentum meter. So this is the meter that basically tells me the strength of currencies, which currencies are strong, which currencies are weak, and then of course you can start thinking about where your trading battles are. So what I'm seeing here at the moment is that the Japanese yen, this is the brown line, okay, this is on the daily chart, is trading low. So the Japanese yen is a currency under pressure. I mentioned Bank of Japan policy meeting. Maybe the Japanese yen is going to find some support this week, so in which case you'd sell the currencies. But at the moment, the technicals are telling you want to be short the Japanese yen. Let's just take that down to the 4-hour chart. I often get asked which time period you should look at this on. I personally like to use the 4-hour chart. From the 4-hour chart, I can see quite clearly what the longer time frame and the shorter time frames are doing. So at the moment, if you're looking for an edge in the markets in terms of trend continuation, what do you think you should be looking at? Maybe someone can give me a clue. If you don't know the currency colors, just tell me what colors you think, and we'll see if you are right. What currencies would you be looking at selling here, and which currencies would you be looking at buying? Any takers for this, please? Let's have a look here. Anyone coming in, selling and buying? Let me know what you think. As I say, you can hop between the different time periods on this. This is really good as well. If you're looking at, the lower time frame scalp charts, you can take this down to the 1 hour just by clicking down up here, down to the 1 hour. And then you can look at the currency pairs that are moving on the scalp. Again, picking your battles. You don't want to be trading currency pairs. Look at these two, for example. This orange and the purple, these are the Canadian dollars. There's no real edge in here at the moment. Why is there no edge? Because they're moving together. The Canadian dollar and the Canadian dollar and the Australian dollar are moving together. If you're looking for an edge and you're a trend follower, would you trade that currency pair? I wouldn't. Lucas says pound yen. Pound. Okay, so this is the pound, the white line, and this is the yen. They're moving away from each other. It doesn't matter if they're above or below the line. I don't know why this. I must have taken this line out if I can. Don't really need it. But I'll tell you what the significance is. It basically means this is the 20 moving average. The way I've set this one up is 20 moving average against the US dollar. So the New Zealand dollar's 20 moving average is up here. The Japanese yen 20 moving average is down here. So the yen is below its 20 moving average against the US dollar. But what you're looking at there, Lucas, is two currency pairs moving in opposite directions. You're buying the pound, you're selling the yen. Okay, we'll have a look at that in a second. You've got San says yellow line for selling. Okay, the yellow line, this orange line, do you mean? San, I haven't really got a yellow line. If you mean the orange line, this is the Australian dollar. This is a currency that's looking quite strong at the moment. It's a strong currency. Now, if you're reversing, if you're looking for key levels of, to reverse that, yeah, you look at that. We can look at the charts individually in a moment. But if it's coming into a level, if you're trading liquidity grabs, or if you're trading resistance, if you're trading for reversal, yeah, you might be looking at the Australian at some point. But at the moment, the Australian dollar is strong. Okay. The euro yen says Ola Depot. The euro yen. Okay, euro. Yeah, I mean the yen is weak. The euro is pushing up, but for me, I would look at. I'm not saying there's a trade here. We'll have a look at it now. But I would say excuse me. The New Zealand is strong on the day on the 4 hour. Let's just have a quick look at the daily for a second. This doesn't necessarily mean that you buy it, but it tells me that I would. It takes a bit of a time to calculate this on TradingView. It should come up in a second. He says. There you go. So this is so this grey line is the New Zealand dollar. The Japanese yen is the brown line. I don't know. I think the New Zealand yen, not that I like trading in New Zealand, I think the New Zealand yen is something you want to look at. Okay, let's have a look at it. I don't know. We'll come back to this in a second. But the New Zealand against the yen, again, it doesn't tell me what's going on, but it tells me where I should be looking. I don't want to be just wasting my time looking at things that aren't moving. Well, this is the New Zealand yen. Now, this is a currency. Look at it. You saw that on the momentum meter, right? This is telling me that this currency pair is off to the races. You've had a whole bunch of days there. What's that? Almost 2 solid weeks of this currency trading higher. We know the yen is weak. The New Zealand is the strongest currency. So if you're looking at exploiting yen weakness, would you not look at maybe buying in New Zealand? So then you take it out to the higher time frame chart. Okay, you look at the daily first. Are we coming into potential areas? Well, for me, I think I would say that you've got pretty much blue sky in this for now until around this zone here. I would expect this zone here to be my liquidity area above here. This is a daily chart, remember. I'm looking at this double bottom. You know the story where buyers become sellers and sellers become buyers, support becomes resistance becomes support, blah, blah, blah. Okay, bounced over a number of times. Yeah. We break through. sellers take control, buyers liquidate, we pull back to that area of liquidity, it's respected, and it rolls off. I can't predict the future, but I would be very surprised if this does not get some resistance at this level, at 87.00, about 60 pips from here, right? But at the moment, you've got 60 pips to play with before we end up potentially having some resistance coming in there. So that is my roadblock resistance. If you're trading trends and you listen to nothing else that I talk about, I'll give you one bit of advice. Don't buy or sell into roadblock resistance. As hard as that will be for you as a trend follower, not taking a perfect trade setup. Let me just make that a bit bigger for you. Rather than buying into liquidity, buying into a bit of it, just try and sit on your hands. It's really hard to do that, but that separates the successful traders from the losing traders, taking just the high probability trade setups. And that is one of the biggest challenges you'll face when it comes to trading, not trading. So map out your roadblock resistance and don't trade into it on the lower time frame charts. That will really increase your win-loss ratio, as difficult as it is. And I have struggled to find people to do that. And I do, private sessions with people, group sessions with people, and we talk about these things, and we go through, and people say, yeah, well, I shouldn't have taken the trade. Well, we have spoken about it. You shouldn't have taken the trade. It's difficult it is. But at the moment, New Zealand's looking strong, yen's looking weak. On the lower time frame chart, you can buy this. So where would I buy this? Well, I'm not going to buy the tops of candles. I never like to buy the tops. I never like to sell the bottoms. I'll wait for the pullback. Well, I would say that this zone here, once we cleared this zone, is a pullback area. It's about 50 pips from here at the moment. If this pulls back, I would expect this zone here to equally be respected. So my pullback area will be something like that. And where was the swing low that led to that new swing high? Well, the swing low is about here. That led to that swing high. So your stops are going to be below here. And that's where you could place your potential trade setup. Set yourself an alert and go and play golf. Oh, the golf's about to start. It has started in Florida, Sawgrass, and the playback. Sky Golf. I'll just have it in the background. So there, that would be your potential trade, and there you get about 2 to 1, and you can must be taken all the way up to that resistance zone. I beg your pardon. Take that up to the resistance zone. You must be get a 1.5 to 1 out of that. I beg your pardon. 1.5 to 1 up to that resistance zone. Sorry, I beg your pardon. It's about 2.5 to 1. You must be get 2.5 to 1 out of that. You've got strong New Zealand. You've got weak yen. Odds are there. No roadblock resistance till we get to there. Who am I to buck the trend? So that is a potential setup there. I quite like the Aussie yen. Okay. Do remember we have got the Japanese data out, but Aussie yen looks quite strong. Aussie's a strong currency. I'm not going to wait another 5 minutes for the days to come up, but let's just have a look at the 4 hour. So I've really messed it now, have I? So the Aussie yen is a strong currency. Aussie, and the other week, Aussie dollar. If you want to sell the US dollar because of this weak numbers that are coming out, if you want to sell because you've got weak retail sales, you've got weak consumer sentiment last week, the dollar is looking weak. The Fed may cut interest rates. The only thing that's holding them back really is the tariffs. If you think the dollar is weak, and it is weak, dollar is down, dollar is down, I think almost like 8% over the last few months. Dollar's weak. Well, why don't you buy the Aussie against it? Let's have a look at the Aussie dollar. Aussie dollar, which is, where's the Aussie dollar? Okay, now look here. This is a zone. This is an interesting one, folks. This is the daily chart. This is a daily chart. This is a double top. It bounced off it 5th of March. That's not, it's an hourly chart. I thought that's wrong. Let me just go to the daily chart on here. Daily chart, Aussie dollar. Okay, you had a naked there. Didn't you? Had a naked? Not really, didn't come into that level. Let me just take those graphics off. This goes high as well, doesn't it? This was a liquidity area. See this pin bar here? This daily pin. Again, that's slightly. Oh, looks as though. Did he win? Oh, McIlroy won it. There we go. On the playoff. So this daily pin at this level, if we take out this pin, then we are on the way back up to 64. And then I would say, really, my liquidity zone, my next liquidity zone would be here. That's my next roadblock resistance for this daily chart. Much more powerful than the 1 minute chart. Daily charts have many more participants that make up that daily candle. Remember that? Okay, bounced off it here. Put on a, we bounced off it with a, oopsie daisy, excuse me. With this move, which equated to a 2% bounce from that level back in October of last year. Broke through, back up to retest, see it all the time. Again, this level up here, chop it, putting an alert on your charts. It could be a reversal level, but it's a level you don't want to trade through. But Aussie dollar, if we clear this zone, clear that pin, then trades to the upside. If you want to sell the US dollar, Australian dollar is a stronger currency that you would be looking at. All right, Sam, what are you saying here? If we put all the focus and dive deeply into technical analysis, will that be enough without fundamentals to be totally really successful and smart trader? I don't have any problems with that, Sam. I don't have any problems with any of my traders just trading the technicals. I think it's important that we know, I think it's important that we go. I don't trade, I don't put it like this. The technicals will dictate my trading, not the fundamentals. When the two align, even better. Yep. And let's be honest, it's very difficult to appreciate, to know what's going on at the moment in the fundamentals. We're in this circumstance at the moment where interest rates should be dropping like a rock with the way that the economy is going. Inflation's coming down, stocks are coming down, sentiment's coming down, everything's coming down. 10% correction in the stocks in the last month. Everything is coming down. Everything should be lower, but and the Fed should be cutting interest rates. But the chances are they won't cut interest rates. So what do we know? I mean, that's why we look at these things. So I wouldn't be basing who am I, little Andrew Lockwood, in the $7 trillion a day market? Who am I to know what's going on the macro view? What will happen? So I don't mind that. I don't mind if you trade technicals without the fundamentals. Fundamentals are also quite difficult to understand, but they don't necessarily hold weight. You look at the the top fund managers around the world, that are supposed to be wizards of economies and fundamentals, and they struggle big time as well. So yeah, I have no problems with that at all. Simon says he only trades off the daily, as you know. I can tell you now, as boring as that may sound, trading off the daily is possibly one of the better things that you can do as a trader. I'm not saying you don't trade off the lower time frame charts. I'll just tell you that the data that I see over the last 15 years in the education space and my own trading in 2005, 2006, when I lost a shed load of money, higher time frame charts are most probably better for you. So let's have a quick look then. I'll just take this up to the top of the hour and then we'll call it a day. As I say, looking at the bigger picture, S&P 500, this is the stock market. Let's have a quick look at the stocks. Okay, so where are we going here? S&P 500. Okay, so the way I have my chart set up, I have the daily in the bottom right corner. I have the 4-hour in the top right corner, and I have my intraday stuff on the 1-hour chart. Okay, so we'll look here at the moment. So we are, where's the trend? Where's the trend in the S&P 500? It's lower. Came right back down to this liquidity zone. Could have got, I would have had my liquidity zone. Just looking at this high, that low, that's basically the liquidity zone down there. Oops, a daisy. Okay, where is liquidity zone? Up here. Okay, so for me, again, do this on the weekend before your trading week, so you're not going to be subject to forward buy, forward bias. That's why I say if you're plotting out these levels real time, you're going to be more subjective, and more emotionally involved. You can do this ahead of the trading week on a weekend or on a Monday morning before you start your trading day. Then you're not going to be so subjective to the emotions. But I would be having this zone here. So I'm looking at the lows here. The low. This is a liquidity zone there. Okay, this is not you and me looking at this. We are not the only ones looking at this zone. I can tell you that now. Okay, this one here. If we get into this zone here, expect a retracement lower, and use price action. Whether you use my strategies, the boomerang strategy, the boomerang reversal. You remember what that is? It's when you basically test the high, pull back, have another go at the high, but fails to take out the previous high. That pattern there. If you see that pattern at an area of liquidity in here on the lower time frame charts, let's just put the 4-hour on here for a sec. If you can see that pattern on the lower time frame charts, you've got a trade entry. Oops, a daisy. Let me just, I'll draw it again, shall I? So we come into this zone here. This is how I set up my trade plan for the week. Set myself some alerts. Into here. Are we going to break through? I don't know. If it comes back and then as another go, that's your entry. It means that it's not just you respecting this area of liquidity. I'd be very surprised if this area is not looked at on the way up. So plotting out these levels beforehand, very, very powerful. You can trade these reversals and continuations on all time frames. But of course, the higher the time frame you go, the less trades you take, much less emotional you'll be. And of course, the less emotional you are, well, we know the biggest killer of traders is emotions, right? So if you trade less, it's going to be less emotional. It stands to reason, doesn't it? So there you have it. So that's the S&P 500. Gold, boy, oh boy. Hopefully, gold has been absolutely loving it. I must have done that one last year. Look at this gold rejection here. That was the boomerang reversal. Look at that one moved down there. It's old now. But there we are in gold. So it is only going up. I can't think. When were we last up? I don't think we've ever been up at these levels in gold, have we? There's the liquidity zone. Kelvin, are you listening in? I think we spoke about 3 weeks ago saying buy gold and go to the beach. Did you go to the beach? Did you buy gold? Had you done that, you're going to be sitting on a whole pile of profits at the moment. I can't really pick a level to the upside here. Buying back at these levels most probably makes sense. I'm a 50% trader. Putting back 50%, this zone is most probably, I've got more edge for you. So maybe keep an eye on something like that. But gold's looking really strong at the moment. DAX looking strong. Yeah, DAX, nice move up in DAX. Bias is strong. Pick your battles. Mostly look to challenge the recent highs here. Buying that on pullbacks. Okay, folks, that is gosh, that's flown by. Well, there you are. That is our weekly session. We've looked at it last week. We looked at it this week. We looked at potential trade setups. We looked at what you should be thinking about, picking your trading battles, not just trading willy-nilly for the sake of it. You know, picking your trading battles. Trading less is often best as well. So there you have it. Don't forget, we'll be on again this same time next week, 1 p.m. UK time, which will be 9 in the US again for one last week, and then we're back to 8 in the US. FOMC is the main event of the week. That's on Wednesday. So there you are. Stay safe. Don't forget. Yeah, okay, just put that out again just for today. You've got this Irish 20% off the 50 experienced. And if you are listening in from YouTube and you found us on YouTube, let's have a look. You can head to the site just by, I'll put that link in there. If you scan that, it should also be in the chat as well. You'll be able to be taken straight to the website where you can avail that offering. Okay, thanks for tuning in, and I'll see you next week. I am in the Discord throughout the trading day, so if you want to head over to the Discord at Funded Trading Plus, there's a channel in there now dedicated to the education section, which is called Education and Trading. So I will see you in there if you want to chat to me off camera. Thanks for tuning in, and I'll see you next week.